Just another quick update on the US dollar and the Australian dollar as I try to give you a close-up of the environment here. The US dollar could be settling into a bit of a consolidation phase. I think it's had the majority of the first wave of pricing in the risks of conflict, geopolitical conflict, and it's going to hesitate now as that fiscal crisis, those higher bond yields, which mean the US will have to pay more for its debt going forward, which means that more and more taxation is required just to pay the debt. So the US dollar is between fiscal crisis selling and conflict safe haven flows, as well as US corporations getting very nervous and wanting to bring all their money back to the US. So very powerful forces in opposite directions on the US dollar at the moment. It's had a strong run to the upside, which we played well. I think it could be volatile sideways here, but I do think any further development in the geopolitical risk will again see the US dollar moving higher. Now, coming down to Australian Canadian dollars, look, I just do a very quick comment. The Canadian dollar, the Canadian economy is about to tank, collapse. They just massively increased taxation on capital gains over $250,000 to 67%. I think Canada's going to be in real trouble. Do not be long the Canadian dollar, even if it's having a bit of a technical rally at the moment, a corrective rally. Be careful of that. The Australian dollar, different story. It's more remote, so we'll get some safe haven flows. It has reasonable interest rates. It's seen by the world as being reasonably stable. So there will be potentially just small portfolio flows from a variety of central banks around the world, perhaps to the Australian dollar, and certainly to gold, which helps gold stocks, which helps foreign buying of gold stocks, which helps the Australian dollar. Nevertheless, if there is a conflict, exports to China could come to an immediate standstill. That is the primary risk for the Australian dollar. So just be aware that a lot of people will see Australia is really suffering if global trade is dislocated. We are a trade-driven nation. That's very important. So I will be looking to sell the Australian dollar rally. I'm actually small short the Australian dollar at the moment. I made a forecast some time ago that the Aussie could go to 58 cents. That's a risk scenario, not a hard forecast. And I think that's something to bear in mind as a number. So don't think, 63, 64 is cheap. It could be expensive in terms of the future. Also a quick shout out, PropX24, PROPEX24.com. Check it out for some really high level service there and some interesting Hawkeye Analytics products. Thanks very much for listening in. Have a great day. Volatile US dollar, bearish Canadian dollar, Australian dollar, bit mixed, but I see significant downside risk. Cheers.